these moves were from pretty depressed levels, but we've definitely seen a pickup in activity over the past couple of months, Rob. Your favorites aren't maybe the most widely held, but have you picked them with the notion that they haven't made as big a move or as much of a rebound as some of the others we just mentioned?
Yeah, Joe, good morning. So at Tortoise, we look at the energy sector and we see an energy revolution going on over the next several decades. And so our focus is on where can investors win in that energy revolution? And so there are two really big megatrends that are going to happen: electrification and decarbonization. And so our focuses are on companies that are going to benefit from those two large megatrends that are going to happen over the next several years.
All right, so Nextera is a utility, but you see it as basically an energy company because it's leading in some of the renewable areas. Yeah,
so, Joe, that's a good example. Nextera is a classic example of one of these companies who's leading the way in the energy revolution and these two mega trends. And so for investors, Nextera used to be thought of as a utility, but it's not our mother and father's utility. It's actually a growth-oriented company that's going to benefit for years from a lot of growth initiatives from the development of solar and wind generation, but also from new technologies such as hydrogen and energy storage. And so for investors, you get the benefits of a decent dividend, about a 2% dividend yield, but more importantly, you get significant dividend growth. And the company has highlighted that they're going to grow the dividend at least 10% a year for the next couple of years, led by all of these energy evolution type of projects.
I mean, natural gas is a hydrocarbon, but you see it as part of the portfolio that you want here. So Cheniere is one for you. It's because it's much lower carbon. But what is Cheniere? It's a pure play in what?
Yeah. So Cheniere is actually a pure play liquefied natural gas exporter. So what that means for investors is this. So it's been proven that natural gas, along with renewables, have actually helped reduce carbon emissions in the U.S. over the last decade. That same formula can be applied to other countries throughout the world, specifically in Asia, where coal is used much more prevalently to fuel power plant facilities all over the world. So what Cheniere's doing is actually exporting U.S.-produced natural gas to other countries around the world. That's displacing coal, that's reducing carbon, and that's part of the decarbonization megatrend that's happening. And so Cheniere is actually the only pure play way to play that here in the U.S. And so that's why we see that as a great opportunity for investors.
Kinder Morgan has a 7% yield that might raise some eyebrows, but you think that that's one to buy and that the yield is sustainable?
Yeah, so Kinder Morgan is a great example of a broader pipeline energy infrastructure company in the U.S. It's been around a long time, a well-known name. But the most important thing is what you highlighted initially. It's a 7% dividend yield. With where Treasury rates are and where they're probably going to stay for a while, fairly low, investors are starved for yield. They're looking for dividend yields and sustainable dividend yields. Kinder Morgan is a classic example. That's a sustainable dividend yield. What's happening in the pipeline infrastructure sector is this, and why it's compelling for investors. Kinder Morgan will probably build one of the last major pipelines in the U.S. for a while. And there's going to be a lot of cash flow now that's going to flow back to investors now that the pipeline infrastructure is set. And that's going to be compelling and a compelling proposition for a lot of investors going forward.
Shepard Smith here. Thanks for watching CNBC on YouTube.